Let's talk to Bobu Kuti. He is the CEO of Sirius Petroleum, which I'm told is a developer of oil and gas assets in the shallow waters of the Niger Delta in West Africa. Bobu, welcome.
Thank you very much.
Right, headlines, the mnemonic of the ticker is SRSP. The market cap is circa £28 million, listed on AIM and floated, I believe, in 2012.
Correct.
Okay, so you've announced some news this morning. Give me the headlines.
So Sirius has effectively agreed to purchase a 75% interest in Precision Energy, and that is, in turn, has agreed to acquire a 40% interest in an entity called Tetra Petroleum Oilfield Services. That has a master petroleum service contract with the license owners on a block called OML 109. Now, the block it's a sizable block. It's about 773 square kilometers, and we're going to do development in two stages. The first stage, stage A, will be enhancing the production. So the field is producing 250 barrels per day,
okay,
which is relatively low. So we're going to be doing a work program that encompasses a development well, a workover an existing well to ramp up production to 5,000 barrels per day. And that's on the producing Ajulebe field, which is in the northeastern corner of the block. The second stage is going to be targeting an exploration potential. So the CPR highlights two step-out structures from the producing field, which is estimated to contain, so the first step-out prospect, the EJ West-Southwest, contains 32 to 38 million barrels of oil equivalent, according to the CPR. The second step-out prospect, which is the EJ Southwest, contains P50 resources of 32 to 53 million barrels of oil equivalent. So it presents some exciting upside. The license it's in a prolific region. It's surrounded by Chevron licenses, the Sonam field to the left. And so we benefit from extensive regional 3D seismic data. And by virtue of that, the CPR has highlighted additional prospective resources of 266 million barrels of oil equivalent. So alongside the producing Ajulebe field, which is to date produced 14 million barrels of oil equivalent, it presents some near-time development upside and exploration potential.
Wow, that all sounds pretty upbeat to me.
Yeah, no, it's great. It's complementary to our strategy, which is targeting shallow offshore assets. We've always liked to step into near-term or producing opportunities that are value accretive to shareholders, yep, such that we can bring our operational partners that we have at the moment, being Schlumberger, Add Energy, and Shelf Drilling among them, to provide an uplift to production.
So would you say this is really a formative deal?
Yeah, I mean, this is as I said, very complementary to our strategy. It's in production. We've always looked to deploy efficient debt capital to develop these sorts of assets. It's a proven asset. It's 35 kilometers to the south of our current asset, the Aurora field, which has 2C contingent resources of 24 million barrels of oil equivalent. Flow tested at 2,700 barrels per day.
Understood. Mm-hmm. So in terms of what's the actual in price for what you're acquiring here?
So we are arranging a $40 million debt facility to execute this work program,
yep,
which includes those wells that are going to be put into production and one of the exploration prospects, the EJ West-Southwest. There is no acquisition or farming fee for this transaction. We're just working with, as I said, the African-focused resource fund to deploy debt and utilize our operational capacity with our partners to bring value-enhancing opportunities to the asset.
Understood. And when do you actually plan to start on this project?
So we need to conclude the debt facility, which we're in the process of arranging. Bearing in mind, we're also deep into the operational phase on the Aurora field, our first asset, where we intend to drill the first development well, Aurora 2, in Q4 this year. So while that financing is concluding, our operational partners are doing the well engineering for that program, as well as the Aurora field. Okay,
because I'm cheap and cheerful, yeah, ask everyone, putting my old hedge fund hat on, give me 3 bullet points, 3 summary points. Basically, why should I consider having your shares in my portfolio?
So Sirius is operating in Nigeria, which is a prolific region. You know, there's lots of access to other similar type opportunities, as we've seen
And
today.
politically safe?
Yeah, so politically, we operate in an area adjacent to Lagos State, Ondo State, which is not in the sort of heartland of the Niger Delta. So we're very comfortable with the above ground risk. We also work closely with the contractors to ensure that our personnel are safe during the operations. So yeah, that's a big factor for us in terms of Nigeria and the prolific subsurface. The second point is the type of opportunities we go for. It's attractive to debt investors, and in that way we can deploy the capital, which is provide minimal dilution to shareholders, so we can execute the campaign. And lastly, we're going to continue to try and partner with like-minded asset owners who buy into our strategy, so we can bring these operational partners to develop the asset. So on 109. The actual license owners have considerable assets all over the world. So this is, significant for us, but relatively small for them. But the fact that we've got these partnerships in place is compelling for them. Yeah.
On that note, we ran out of time. Thought-provoking. Thank you very much.
Thank you very much.